Hello and welcome to this January 4th, 2011 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Coinstar, ticker symbol CSTR. This is about a $1.8 billion consumer discretionary company. Technically, you can see the stock in the near term was trending lower, but if you look at a longer term chart, actually Coinstar had been in a nice uptrend. So this was really a continuation gap as opposed to a breakaway gap, because this was continuing that prior trend, which had been higher. But what makes a continuation gap is a move up, a continuing move up after the open, and on very, very heavy volume. And we certainly saw that at the end of October. So a huge move up. We got the continuation gap. Anytime you see a continuation or breakaway gap, the big support area normally is at the top of the gap. So we gapped from what, $46.50 up to about $55. The top of the gap is $55. The bottom of the gap is at $46.50. And you can see actually that this gap was I think $55.07. But look at the low on Monday. Coinstar came down after 2 or 3 weeks of selling, came down to $54.92, 15 cents below this major support level, and then reversed higher. It was also the largest volume that we had seen since the end of November, so probably in the last 5 or 6 weeks. We had a negative divergence that had printed back at the end of November as we were making new highs. With that higher price high, we had a lower MACD, so we actually had a huge move up, but this was an indication that momentum was beginning to slow. And as we came back up one more time here near the 67.50 level, notice the volume was completely gone out of the stock. So we had really 1, 2, and then 3 highs, all with declining MACDs. And right at the last one, you can see again volume very light on this push to the upside. Then we started seeing the selling pretty quickly, went all the way back down to the 50-day. 50-day is normally where we look for some support after a negative divergence forms like this. However, we did have the gap support that had not been tested down at 55.07. So in this case, we went a little bit below the 50. If you notice down here, there were no really big volume bars on this breakdown below the 50-day moving average. So I give it a little bit of a pass on that. But I would expect it to turn at 55.07, and that's what it did on Monday. So I think the current price down to this level is where I would be looking at possible entry. Keep a stop in play, maybe an intraday stop just below Monday's low, 54.92, maybe go down about 1% below, somewhere around 54.40, 54.50. Might be a decent intraday stop level, and then watch any close below the $55 level, especially with increasing volume, I would be leery of. But other than that, I would expect Coinstar to make a turn here from this $55 level, head back up. First area of resistance, you can see the last breakdown here in mid-December came below 4 or 5 days worth of support around the 59.50 area, and notice that the 20-day moving average right now is at 59.30. So I think if we can get a push back up into that area, that's going to be the first challenge for the bulls, is to try to negotiate the moving average and this price resistance. If volume continues to increase, though, I would give that I'd give the chance of that breakout above these moving averages a pretty strong likelihood. So we'll continue to monitor that. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.